Good morning, hello and welcome to Money Control's live stream. You're watching Opening Bell with me, Lovisha Darad. Well, another positive start for the markets given that the GIFT Nifty has been indicating a strong start for today. We saw that the global handover was strong. We had a strong close on Wall Street overnight. S&P 500 ended on a record high and NASDAQ also extended gains to the fourth straight day. In the Asia Pacific markets also, we started the trade on a higher note early this morning, given that the China's stimulus measures have taken an effect. Even Japan's headline inflation data eased in August, beating expectations. So overall, all in all, it looks like a good start for markets, given that we have seen a record-breaking rally in yesterday's trading session as well. Sensex had climbed to about 85,900 mark for the first time, and even Nifty touched about 26,250 mark for the first time on the day of monthly expiry. Now that it has closed above the 26,000 mark decisively, it remains to be seen whether or not we would march to higher levels. But we'll try to understand as markets get pricey what your trading strategy should be at this point of time. So lots more lined up. We'll also be addressing your stock related queries. So keep posting them in our live feed and we'll try to address them before 9:30 a.m. with our technical expert. For now, let's take a look at the top headlines at this hour. On a record high note, while Dow Jones and NASDAQ Composite indices added 0.6% each. This came after second quarter GDP data beat street estimates and US weekly jobless claims fell to lowest levels in 4 months. Majority of the Asia Pacific markets traded in the green this morning as China's stimulus measures take effect. Japan's Nikkei 225 rose over 0.5%, boosted by softening headline inflation data in September. Meanwhile, the GIFT Nifty is also hinting at a positive start for the Indian bosses. Brent crude prices tumbled over 3% as report indicated that Saudi Arabia is pressing for production increases this year. Meanwhile, silver rose to its highest level in 12 years, building on gold's rally of record peaks. Crucial NSE indices rebalancing to take place after the market closes today. Stocks like Trent and Bharat Electronics are set to enter the Nifty 50 index, replacing Divi's Lab and LTIMindtree. The Nifty Bank will also see an inclusion of Canara Bank at the expense of Bandhan Bank. Alright, so in yesterday's trading session, we saw that the heavyweights did a major of the heavy lifting, which helped the markets notch fresh record highs as well. All of the sectors ended in the green. Even India VIX cooled off by 5%, marking its 2-month low. Among sectors, we saw Bank Nifty and Nifty Auto hitting new all-time highs. And the Nifty Metal Index also extended gains to the 5th straight day. So all in all, we saw Nifty wrapping up a good September series with 4th straight day of gains and an up move of over 1,000 points. Now for the week so far, every day was marked by Nifty and Sensex notching new record highs. So with this, Nifty is already up over 1% for this week and is set for third straight weekly gain. Today is also an important day as NSE indices rejig is set to take place after the market closes. Trent Bharat Electronics will be the new entrants in the Nifty 50 pack. They would replace LTIMindtree and Divi's Lab in the rejig as well. We can see quite a little bit of an action in IT stocks also, given that Accenture has raised its revenue guidance to 3 to 6% for FY25. Now, looking at some of the option cues, Nifty's put call ratio has increased to 1.37 from 1.33 levels in the previous session. So that indicates that there is some bullish momentum in the markets. In the F&O ban list, there were no new entries, nor were there any retention. But if we look at the fund flows, foreign investors turned out to be the net buyers after 2 days of consecutive selling. They bought about stocks which was worth 630 crore rupees in the cash markets. But if we look at domestic institutional investors data, they were also the net buyers and they poured about 2,405 rupees in cash markets. So domestic buyers did once again majority of the heavy lifting in yesterday's trading session given the large liquidity. Now, just a couple of minutes for the opening bell. But on that note, let's get on board our technical expert of the show, Raja Venkatraman, co-founder of NeoTrader. Raja, so good to have you here.
Yeah. Good morning, Lovisha. Thanks for
Okay, good
inviting me to
morning.
the show.
Yes, of course. Raja, first up, we saw that the Nifty closed decisively above that 26,200 mark. So what are the next key levels for the traders to watch out? Also for the Bank Nifty, if you could give us some levels for the traders.
Yeah, sure. So the way the markets are behaving, they have been quite erratic at the moment. And well, we did notch up a good number yesterday, and largely it was due to the expiry. And what has been my premise is that there has been a lot of short covering action that we have seen in the entire September series, and that really came to naught yesterday because there were a lot of positive cues emerging from the global side. So the global cues continues to remain positive with rate cuts being announced in a rapid pace, and that's what is triggering some bullish momentum. And I expect this bullish momentum to continue. However, trading on breakouts have to be looked at with caution because breakout trading is not succeeding at the moment. And largely, as you rightly mentioned, the large caps have been promising, and the FNO pack is actually behaving much better than the mid and small cap space. Now, when you want to look at the OI condition, you are definitely of the belief that the bulls are in the driver's seat. But then one should be looking at dip levels to buy into. So, looking at the max pain, which is around the 26,100 area, that seems to be a good support which one should look at as the day proceeds. 26,100 to 26,000 should be the next level of support because that's an interesting area to watch out for. So a dip buyer should be an interesting proposition because I expect the markets to be positive based on the time cycle studies. Monday, Tuesday, and Wednesday to be on the positive side. So the dips which will be offered during the day should be considered as a buying opportunity rather than trading on breakouts. So the levels on Nifty are around 26,100, and on the Nifty will be closer towards 54,000. We have been discussing several times in our show about the role of Bank Nifty, and that premise has come about quite well because Bank Nifty has been at the forefront in helping the indices rise higher, and it will continue to remain. And I had projected a target of 55,000. Yes, of course, we are very close at hand. Now, the targets of 55,000, if surpassed, the next target is towards 57,500 in the October series. So, we are looking at interesting prospects here. Look to buy on dips rather than trade on breakouts.
Okay, so buy on dip. Okay, we have the opening rates flashing in your screen. So Sensex and Nifty, they have been trading, a little bit mildly in the green. Sensex is also flirting near about its all-time high level, 85,865. The first opening rates coming up on your screen. Nifty, however, is down about zero point 0.7 points. It is around trading about 26,215 levels. Yesterday we saw that the Nifty had notched its all-time high of 26,250 levels. So we'll see whether or not the October series opens on a positive note as well. Some of the top gainers on the Nifty has been ITC and IndusInd Bank, and top losers on the Nifty is dominating Power Grid and SBI Life Insurance. If you look at some of the top sectors, we can see that the Nifty Auto and Nifty Bank have been, quite the laggards after we saw that they had hit all-time highs in yesterday's trading session. But what is doing well is Nifty Metal Pack. Nifty Metal Pack once again holding strongly. It is set for a sixth consecutive straight day of gains. Nifty IT. Do note that Accenture had raised its revenue guidance for FY25. So IT stocks, we are seeing that they are doing quite well. Nifty IT is up about 1% in trade today. What seems to be doing well in technology pack is Wipro, Tech Mahindra, Persistent Systems, Tata Elxsi and Cyient. So that is what you have to watch out for IT stocks in trade today. We'll see whether or not IT stocks hold up in the intraday deals and of course in the end part of the session as well. Pharma indices yesterday saw a little bit of a beating in the initial session, but today it has opened up with 0.1% gains. India Wix, once again, India Wix has been seeing a lot of cool off. It has dropped about 3% in trade today. Yesterday also we saw India Wix cooling off and it was near to its 2-month low. Today also we are seeing quite a bit of a cool off. But Raja, PSU banks, yesterday they were doing well. Today also they have been doing well in trade. They've been taking the front seat. The likes of SBI, PNB, Bank of Baroda also did well. But SBI is still away from its 52-week high of 912 rupees. And in the past month, it has been languishing in trade today. So can we see a certain reversal trend from here on?
Yeah, the way the markets have been behaving, the leaders will definitely show some positive traction. So I continue to believe that the private banks are much better placed than the PSUs. So we will have to wait for a while for the PSU banks to recover. So if you are going to look at doing some low price buying or entering at lower levels. So PSU bank should not be considered unless you have additional capital. So I am still an avoid for the PSU banks, but then yes, the private banks have been very positive, and HDFC Bank is leading from the front, and you got supported by Axis Bank, IndusInd Bank, Axis. ICICI. So these are the bank names which one should be participating if they want to participate in the banking space. So there are a lot of sector specific action that is happening. So one should be concentrating on that rather than shifting their attention to stock specific action, and especially not the PSU bank.
Okay, so not just the PSU banks, but you should also participate in private lenders coming in. But Raja, you mentioned HDFC Bank. HDFC Bank has been quite the laggard so far this year. So can we say that the elephant can dance for the remainder of the year?
Yeah, definitely. Because two shows ago, I had indicated HDFC Bank because they were showing signs of bottoming out, and I said that if the Bank Nifty has to go up, somebody will have to step up, and that somebody was HDFC Bank because it's of course having the weightage and the kind of traction which it was showing over almost 2 months. It was consolidating at around the 1600 levels, and that's what gave it the nice thrust. And from 1680 levels, now it has jumped up by 100 points. It's targeting its former highs, so there could be some bit of sell off there. But then if it actually breaks out above 1780, 1790, then we could see a very big move towards 1950 within the next 3 months. So it's a very interesting space right now. HDFC Bank is letting go of its past, and I'm seeing that this could definitely bring about a big change in the banking space itself.
Okay, banking space as well. But diving straight to viewer queries right now, we have the first query coming in we have the first from Nana Prakasham. He is asking views on Apollo Tyres for the short term. Raja, Apollo Tyres, if we look at the past 1 month chart, it has been doing well. It is up about 10%, and even in the 6 months charts, it has been up about 18%. So can Apollo Tyres do well in the short term as well? What do you suggest at this point of time?
Yeah, Apollo Tyre has been testing the levels of around 550, and there has been a continuous attempt to cross that level. And what has happened in yesterday's close is that closing above 550 does augur well for the prices. Overall, the momentum is on the positive side, and there is a shift seen in the trends as well. So one can consider going long in Apollo Tyre if one is holding an investment there. They can continue to hold on with a stop loss below 520 because targets are expected towards 650 from a short term perspective.
Is coming in for Apollo Tyres. Another query if we take is by ARC. He's asking, is there any chance to enter Tata Motors right now for a short term gain? So, Raja, what do you think about Tata Motors? It is still trading below its 1000 levels on the charts. It is today it's up flat in the green. Yesterday also we saw quite an up move, and it was one of the top Nifty gainers. But if you look at the past 1 month charts, it has been languishing in trade. It is down about 7% in trade. But for the short term, it looks like does it look like a good buy at this point of time?
See, everyone likes to get into Tata Motors just like they like to get into Reliance. But then the problem is that these stocks will give you money over a larger period of time. Now, the larger period of time entirely depends on what kind of mindset you're having as you're going to take this trade. Because Tata Motors is not going to make money for you in a quick span of time. So one should consider that scenario before selecting such stock. Because Tata Motors is definitely not in a buying zone. I would like to avoid Tata Motors at the moment.
This moment that is coming in for this. Another query, Devashish Chakravarti. He's asking what are the views on SBFC Finance. SBFC Finance, Raja, we saw that the stock had hit 20% upper circuit in recent days. And today also SBFC Finance is doing quite well. It is up about 3% in trade today. So what do you think about SBFC Finance? Is this a good buy at this point of time?
Definitely not, because the kind of jump it has witnessed, there is only some profit booking emerging at the moment. And this kind of stocks will tend to move a little slowly. So right now we are witnessing some profit booking, and I would wait for it to close above 96. So one can track the closure of the prices. If towards the end of the day, if it is trading above 96 levels, then that would be a good time to enter. Yes, it is showing some momentum, but we need it to close above 96 levels for us to enter the stock.
Okay, so 96 levels to watch out for SBFC Finance. Coming to another stock, Skipper. Skipper, Satya has been asking that please ask the better entry levels for Skipper for 1 to 2 years of investment. Skipper, what do you think, Raja? It has been given about 13% returns in the past 1 month. Does Skipper look like will we see further uptrend in the coming days as well?
Yeah, definitely. The momentum is on the positive side. The price is clearly thrusting higher, and with the positive flow which we are seeing in the market, the stock will continue to witness a momentum here, because also it's part of the metal industry, metal fabrication industry. So the momentum which we are seeing now after some consolidation in the last 3 months does indicate that it can move higher. So if you want to buy at lower levels, it would be only towards the region of 420 to 425, and the targets expected are around 650 within the next 6 months.
That is coming in for Skipper. But IT names, today IT names have been doing well, Raja. So how do IT stocks look in the charts? The likes of TCS, Infosys, Tech Mahindra, given that the news flow is also there about Accenture increasing its revenue guidance for FY25. So can we see certain bullish
Right.
momentum, certain positivity for the IT stocks from here on?
Yeah, definitely. You can consider the IT space. IT space are looking quite promising. The likes of Persistent Systems, the likes of HCL Tech, Infosys, TCS, all of them are looking quite encouraging. Amongst them, I would like to place my bet on Persistent Systems. I would like to place my bet on Coforge, because these are two of the stocks which move quickly. So I'm looking at stocks that can move quickly, and they are good trading bets. You can do intraday bets, you can do multi-day bets. They are looking very interesting at the moment. Yes, at the start of the day, largely driven by the Accenture news, you are already witnessing a big gap up scenario. Now in such regard, it's better to wait for some dip. So I based on my analysis, I feel that there could be a potential dip emerging, and that dip should definitely be tracked and participated in, because the momentum is expected to continue, and we can see it spill over into the next week. So IT stocks are definitely something which should be tracked today, and use the dips to buy into rather than buying it at the current levels, because the risk to reward ratio will be on the lower side.
Okay, so use the dips to buy IT stocks, that is coming in. But if we look at another query, Karthikeya Singh, he has been asking what are the levels at which we take position in Silchar Technologies for 2 to 3 years. Silchar Technologies, Raja, it has not been doing well from the past 1 month. So can we, is this a good time to buy, or should he, accumulate and, book profits at this point of time?
Yeah, currently the momentum in this counter has been very subdued. So it's best to stay away from this counter and look at some other sectors that are showing some momentum, like say IT and metals. They are quite a bit in demand, and I believe that the momentum will continue. So one should not stay away from these sector rather than participating in some other names.
Coming in for Silchar Technologies. Vishal Dave, he's asking his view on Bharat Electronics. He's asking whether he should buy or sell. He's holding 100 shares at 250 rupees. Bharat Electronics, now the stock is up about, about 1% in trade today. It is already, above his buying price, which is like 292 rupees it has been trading. Bharat Electronics, also the news flow has been that it will be entering the Nifty 50 in the NSE indices rebalancing today as well. So Bharat Electronics, what do you suggest on the charts, Raja?
Yeah, there are positive tailwinds, like you mentioned, inclusion into the Nifty. But then overall, the defense space has been undergoing some bit of repercussions right now, and the repercussions have not been good. And every rise has been a sell-off here. So the likes of HAL, BEL, or be it any stock related to the defense space is being avoided at the moment. So it's not a buying opportunity because the sector itself is under some pressure, but yes, the stock is at support, and if one would like to enter, it should not enter your 100% of the amount allocated. You can enter maybe 50% and wait for some dips in the stock closer towards the 280 region for entering the balance. Overall, the support is good, and the stop loss will be below 278.
Is okay. Just a final question that Alex has been asking his view on metal stocks, Hindustan Copper and NMDC. Just a quick one-liner. What do you think about metal stocks, given that it has been propping up in trade as well on China's stimulus measures?
Correct. Yeah, so the Chinese stimulus measures are the large drivers, and these tailwinds, one should take it with a pinch of salt, because these similar measures are definitely encouraging, but then the impact and its is going to be over a period of time. So one should be entering with the metal names, but then one should not consider it as an investment proposition. Largely it is a trading bet, maybe a 2 to 3 day bet. One should use that and participate. So Hind Copper is looking positive, but instead of Hind Copper, I'll go to NMDC as well. I would like to place my bet on Vedanta, because Vedanta, after a large period of consolidation, has shown a nice breakout, and any dips which you can see closer towards the 500 or 490 region would be an interesting candidate to buy if you want to enter into the metal names. Now, speaking about NMDC, NMDC is quite attractive, and it is trying to recover from lower levels after being beaten down for quite a bit of time. But then it has got some resistance zones around the 242, 245 mark. Once it crosses the 242, 245 mark, then it will become a good, interesting bet. So wait for that level to cross and then participate in NMDC.
Okay, NMDC and Vedanta coming in from Raja. But thank you, Raja, for taking out time and sharing your valuable insights, for answering all the queries as well. Hope to connect with you soon.
Yeah, thank you. Bye.
All right, so that is coming in from Raja. But let's take a check at the market. Sensex and Nifty still holding strongly in the green. Sensex is up to 85,860 levels, while the Nifty is still floating above the 26,200 mark. If we take a look at the broader markets after 2 days of languishing trade, it has been doing well. Mid-cap and small-cap indices is up about 0.2%, and small-cap index is about 0.4% in trade today. If we take a look at the sectoral indices, what has been doing well? Nifty IT. Once again, Nifty IT is up about 2.7%, which is like nearly 3% in trade today after Accenture's revised guidance. So we might be seeing some action in IT stocks. Let's wait out and watch how IT stocks perform in the remaining of the trading session. But once again, Nifty Metal is also doing well. It is up about 1% in trade today. Nifty Pharma 0.2%. India Wix is it saw quite a cool off of about 3% in trade, but now it has been settled at like 11 levels. Okay, So that has been doing well. Among the top Nifty gainers, we are seeing Infosys, Tech Mahindra, LTIMindtree, Wipro, HCL Tech, all of the IT names, playing out well in trading session today. And among the top losers, Power Grid, L&T, Bharti Airtel, ONGC. Yesterday also we saw ONGC being one of the dominating list in the Nifty 50 losers list. Hero MotoCorp once again in the laggard pack after UBS gave out its sell rating on the counter, saying that the competitive intensity is heightening up for the two-wheeler maker. So that is all for the markets. But all right, so let's get on board with our fundamental analyst for the show, Shrikant Chouhan of Kotak Securities. Shrikant, so good to have you on the show. Shrikant, can you hear me? Okay, I think there is a little bit of an audio snag here. But until then, we'll connect with Shrikant. But we can see that the Nifty indices, Nifty rebalancing is also there, is also set for today. We can see that Nifty indices rejig is also set for today. We can see that Trent BEL will be the new Nifty 50 entrants, and they will be replacing Divi's Lab and LTIMindtree. So Trent, according to the Nuvama report, Trent is expected to receive about 500 million inflows, while Bharat Electronics is expected to see 336 million inflows. Do note that all of this rebalancing will be effective from next week onwards. But among others, we can see Canara Bank also in the addition of the Nifty bank list. It is expected to see an inflow of about $92 million. Among others, we can see JSW Energy. It is also set to enter the Nifty Next 50. It is expected to see an inflow of about $54 million. And we can see others like Macrotech Developers, NHPC, BHEL, Union Bank of India. They are also some of the other inclusions in the Nifty Next 50 index. But let's once again try to connect with Shrikant. Shrikant Chouhan of Kotak Securities. Shrikant, can you hear me once for now?
Yeah, I'm audible.
Okay, Shrikant, to have you on the show.
Yeah, it's audible.
Okay, so Shrikant, let me start off with just an overview of the markets. We saw that the record rally was unbeatable yesterday. But what is the next target for the year? Can the current valuation sustain the further up move?
Yeah, good morning everyone. I think the markets are trading with we can say at expensive valuations. We are at 21 times to the FY26 EPS, which is very close to the upper boundary of the multiples. And whenever there is a correction, I think that will be an opportunity for investors to enter into some stocks. But at the same time, if we go through with the global macros and domestic macros, then after a very long time, we are seeing such type of macros for any specific country like India. Because in last 20 years, if we see the overall entire rally of the market, and along with that, if we compare global macros as well as domestic macros, then that was completely lacking. But this time it is something which is really turning positive. Most of the macros, like inflation is at its lowest levels. Even if we go through with crude prices, then they are also have fallen to some $74-$75, which are at we can say balance level. And even current account deficit is also falling. So broadly, I am of the view that because of this domestic liquidity is consistently supporting to the market. Now there is possibility that US may cut the rate aggressively in next few months, which will actually increase inflows to emerging markets, and that we have already started seeing for China as well as Hang Seng, and it will now spread into other emerging markets. I am of the view that yes, it is expensive, but we need to be more and more stock specific in this market. Yes, there are few stocks which are available at decent valuations, and we can see some upside from them. But for Nifty per se, yes, we are at expensive levels, and it is better if there is any correction in the market to look for adding Nifty or Nifty specific sort of any trade in this market.
Okay. So some of the critical factors to watch out. But Shrikant, we saw that the first quarter of India Inc. was ended on a quite a mixed note. So how the Q2 earnings are expected to pan out, especially after Accenture has also increased its revenue guidance for FY 2025, but it's still finding some pain in its client spending. So what does it mean for IT stocks? Today they have been doing well, but what does it mean for the remainder of the year as well?
See, for IT companies, yes, it is very, very crucial to see that how actually they delivers numbers, and along with that, we have to see that whether they talk about any discretionary spending or not. But it was like expected that US Fed will cut some 25 basis points this time, and maybe 25, 50 basis point in next few meetings. But this time only they have cut the rate by 50 basis point, and they are talking about 50 basis point more in the next meeting. If that is true, and if that turns true, then actually it will help BFSI sector of US, which actually like increase their flows on the discretionary spending, and then it will indirectly benefit to the Indian IT. So I am of the view that we have to see that how actually the guidance come. But broadly, I am of the view that most of these IT companies are available at decent levels. I'm not saying that they are very attractive, but at the same time, they are not like very expensive. So few stocks like TCS, Infosys, I think they can do well, and we need to be like invested in these companies till the announcement of the numbers.
All right. Shrikant, any picks from the space for IT stocks that you mentioned right now?
Yeah, from the IT space, we like Infosys. Our preferred pick is Infosys. We also like TCS. See, like in both these stocks, the upside is quite limited. It is what close to, I can say, less than 10%. But still, if there is like specific guidance comes from any of the large cap company like TCS or Infosys on the positive side, then that will actually help these stocks to do well in the later half. So currently, Infosys is around what 1400 level, sorry, 1900 levels, 1950 levels. There we have a target of some 2050, and currently it is valued at what 25 times, which is like we can see the median level of the upper band, and if we consider the exact upper band, then it is close to 30. So broadly, I'm of the view that if something goes really positive for the IT sectors, then Infosys can do really well. But from these levels also, we can see some at least 10% sort of upside for Infosys. For TCS, there also we have a target of 4,500, and it is also trading at 25 times to the FY27. And there also the possibility of making some 5 to 10% sort of returns. And again, as I told you, guidance which will something will help IT stocks to do well. But at the same time, if US goes for cutting the rate by 50 basis point more, then certainly it will help IT sector.
Okay, so another 50 basis point rate cut is positive for IT stocks. But PSU stocks have been languishing in the market, be it the likes of railways, defense, or even banks. So, Shrikant, what strategy do you recommend investors at this point of time? Is the theme playing out, bottoming out of the market right now?
See, all these stocks rallied a lot from their like immediate lows, or even if we consider their fundamentals, then they are far expensive. And now the entire focus will come on how they are executing the projects or orders that they both. Yes, they have like huge order books. Now we have to see that whether they can execute to that, and that will come in the results. So I'm of the view that only after seeing the results, the investments will come in these stocks, especially defense and railways. And that's the reason I'm of the view that at current levels also it is better to stay away. If the company really delivers very strong numbers in terms of increase in the revenue or let's say on the EBITDA front, then certainly we should look for adding even at those levels. But at these levels, it is little bit risky. Yes, if there is a view of next 2 to 3 years, then certainly we should look for adding leaders from this space. The reason is because the way there is global macros and domestic fundamentals, this economy is going to do well in next 2 to 3 years of time. But in next immediate, let's say 6 to 12 months of time, I think all these stocks are expensive and they may spend some more time at current levels, or we may see some more correction.
Okay. So expensive at this point, but they look good from a longer term horizon. Shrikant, the metal stocks, they have been rising recently after the China announced stimulus measures. So do you expect the gains to build on, or is the rally expected to fizzle out? You know, because these measures also take time to hit the ground reality. So can we expect, how does it look from a longer term horizon?
See, for metals, what is important is whether US is cutting the interest rate or not, whether US is increasing the risk appetite for investors or not. And that has actually happened. Because of cutting 50 basis point, now the China is having room to cut interest rates on their different maturities. And that has actually happened. In fact, they have announced very big stimulus, which is actually going to help the economy, to the China economy. And if China is going to do well, then most of the time we see a good amount of buying activity and specific buying interest in metals and commodities. And this is what that we are seeing since last few days. In fact, Shanghai, which was around some let's say 35, 3600 levels, from there it rallied nearly 15 to 20%. And there is a scope of at least next 15 to 20% sort of rally based on its overall fundamental developments. So I am of the view that if that economy is going to do well, and if it is going to support the cut in the interest rates by US, then certainly we are going to see further more upward pressure for all these metal companies. In that, Tata Steel, Steel Authorities sort of stocks can do well because there they have advantage of iron ore. And in fact, these stocks were under a lot of pressure. So while looking at these particular development, I am of the view that Tata Steel should do well. Yes, no doubt that at current levels, at current valuations, it is expensive. But if there is again a view of next at least 12 to 18 months, then certainly we should look for adding Tata Steel to our positional portfolio. We also like Hindalco. In fact, most of the metal companies are quite expensive and they are trading above their fair values. But now the strategy should be to buy with a view of more than 12 months.
Okay, so strategy should be to buy for metal stocks. But Shrikant, how do banks look like? They have underperformed benchmarks. Nifty Bank has underperformed the benchmark so far this year. Given we have seen challenges in margins, deposit accretion, and higher credit offtake, you know, higher credit to deposit ratio as well. So can they perform well in the remainder of the year, or will they see a further underperformance as well for the remainder of the year as well?
See, from the BFSI space, microfinance companies are going to underperform because there we are seeing some stress on recoveries. But for banks, I think certainly for private banks, it is positive that developed markets are cutting their interest rates, which will reflect on the emerging markets, and even India will also consider cutting the interest rate by the end of this calendar year. If that happens, or then certainly it will help private banks to do well. I am of the view that PSU banks can also participate, but there we need to be very, very selective because again, the problem is that they are expensive, and whenever there is like a problem on the microfinance side, we see some stress on PSU banks. I'm of the view that it is better to be more selective in this particular space. There is no need to worry. Yes, if there is a long-term view, then we should look for adding even State Bank at current levels because there is upside of 10 to 15% from current levels. We also like Bank of Baroda, which is currently around 245. There also we have a target of 280, 85. Yes, we need to see that how actually these banks report their numbers. But at current levels, these stocks are attractive from the private bank space. We like Axis Bank, we like HDFC Bank. ICICI Bank is also very close to its fair value, but we also like IndusInd Bank. So yes, there are definitely a number of stocks which are available at decent valuations. And if FIs are like going to continue their investments in emerging markets, then it will help India also. And then whenever they buy in any emerging markets, they very first prefer buying technology as well as financials. So that's the reason I'm saying downside is protected for all these financials. Upside is definitely there. So buy if there is a medium to long term view.
Okay, coming in for a medium to long term for banks. But Shrikant, we can see new age tech stocks also gaining flavor in the street. We saw that the last month data, we saw that mutual fund investors have lapped up a lot of shares of Ola Electric, the likes of First Cry as well as Zomato. So how does new age emerging theme looks like in the street? Can we say that the brokerages have shifted their views on new age tech themes for now?
Yeah, there are like number of companies which are really good in terms of their business. In fact, they did well in last 2 years, and few of them turned profitable, like Zomato and Policy Bazaar. We are basically bullish on Zomato. There we have a target of 315. But I'm of the view that for individual investors or retail investors, it is better to be very selective in terms of buying this type of companies because their profits or maybe their whatever the fundamental developments that they can deliver in next maybe a few months, that will remain like highly volatile. We need to see that whether they acquire any company, whether they are going into any business, and if that business is going to actually help the companies in the near term or not. So all these things are there. So there are like multiple things which we need to very closely analyze, and after that only we can decide that how whether my investments can deliver me XYZ returns or not. But at current levels, Zomato looks really attractive bet to buy for. I think the way they are acquiring new businesses and the way they are delivering numbers, I am of the view that this company is going to do well in next at least 12 months and even more that. So from the new age company, I think yes, we need to be very selective, but in that Zomato looks very attractive at current levels.
All right, so Zomato coming in for a bullish take for a longer term horizon. Shrikant, we discussed about metal stocks, we discussed about IT stocks, we even discussed about banks and new age themes. But what is this one standout performer that might do well in this expensive market? We have seen successive rallies, we have seen valuations also getting a little overheated. So what should investors' trading strategy at this point of time should be?
See, very clearly, the strategy should be to look for adding position gradually on dips. Whenever there is a correction in the market, look for adding some stocks to your investment portfolio. At these levels, yes, we are seeing rally, and whenever there is a rally, the greed increases, and then the retailers or maybe investors makes mistakes by adding those stocks which are like really trading with expensive valuations. But they can always talk to their advisors or professionals and understand that which are the stocks which are available at decent valuations or fair valuations, because at these levels if you don't participate then also there is a problem. But yes, even if there is a 10 to 15% upside, then that is also better than the what we can get from the by parking funds on the FD side or in the savings. So it is better to always stay invested in the equity, but yes, invest in those companies which are really attractive. I'm of the view that investors should look for adding stocks from the BFSI as well as technology space. For metals, we need to be more and more, I can say, experienced in this market, or we need a very huge risk appetite. So it is better to be very balanced in this market. Try to invest in those companies which are related to the economy. Say, for example, if the economy is going to do well in next 2 years of time, then certainly all this BFSI sector is going to do well. And that's the reason it's like very simple to select few stocks from this space and keep investing in these stocks on every dip. We also auto sector. In that we like Tata Motors, which is currently around 990, 995. There also we are expecting furthermore developments in next maybe 12 months of time. We also like Mahindra and Mahindra because see, all these stocks are related to the performance of the economy, and that's the reason we are advising only those stocks or sectors which are like which retailers can easily understand, and they can invest with a very high confidence. So be a little bit patient. Do not try to invest heavily at higher levels at current levels. But yes, if there is a correction, then certainly look for adding positions.
Okay. On that note, thank you, Shrikant. Thank you for joining us. Thank you for your valuable insights as well. Hope to connect with you soon.
My pleasure. Thank you.
Thank you. All right, let's take a look at the markets. So Nifty and Sensex, once again we can see a record high. Sensex is above that 85,950 mark, is a 950 mark, and Sensex has been like 85,950 mark, and Nifty is also floating above the 26,265. So once again, we can see another record high for the markets. Quite a good, and it's going to end on a good note for the week. But other than that, we can see, sectors also, a lot of buying coming in from IT, metal stocks, and auto also. We saw an initial dip. Now it has been doing well. It is holding about 0.2% gain. Broader markets are also doing well. Broader markets, about small caps is about like 0.5% up. Mid cap is also 0.3% up in trade today. Among the top gainers, we can see IT and metals dominate the list. Among the top losers, we are once again seeing HDFC Bank, L&T, Power Grid, Bharti Airtel and ONGC among the top Nifty laggards. So all in all, let's look out how the markets are going to react at the end of the session as well. But on that note, we come to an end of this segment. We'll catch you on closing bell at 3:30 p.m. Until then, stay tuned to moneycontrol.com for all the news updates and market insights.